Welcome back to another video. Before we start, please hit the like button down below if you haven't, and please subscribe to help grow our channel. Before we dive deep into the video today, I do want to note this video is for entertainment purposes only. Please do not solely rely on the information in this video, and do consult with your CPA to determine if this investment strategy is right for you. Today, we'll be discussing why you should be investing in the S&P 500 index fund. And I understand that there's multiple different investments that you can make, such as buying individual stocks, real estate, crypto, and even physical precious metals. No matter what investment you're looking to buy, and I know there's a lot of other great ones as well, I do personally believe that everyone should own a piece of the S&P 500 index. And for the average person, I would even say that 50% of your stock portfolio should be in the S&P 500. In this video, I'll be explaining 5 reasons why you should be investing in the S&P 500 index. And by the end of the video, you understand why you're missing out by not investing in the S&P 500 index. So let's dive in and talk about our first point, which is diversification. The S&P 500 represents a broad cross-section of the US equity. It encompasses companies from a diverse sectors such as technology, healthcare, financials, industrials, and more. By investing in the S&P 500, you're getting exposure to the overall US market. While the S&P 500 consists of large cap companies, it also has a mix of mid cap companies as well. The size diversification helps with the risk associated with investing in different market caps. Large companies tend to be more stable and established, where mid cap companies tend to have higher growth but also carry higher risks. As the S&P 500 is market cap weighted, meaning that larger companies have a more significant impact on the index versus the smaller companies, the weighting methodology reflects the market cap of each company, with the larger companies carrying the weight of the index. As a result, the larger companies have a more significant impact on the index. Lastly, the S&P 500 is periodically rebalanced to maintain its composition and the reflection of the US stock market. The rebalancing ensures that the index provides an accurate representation of the US equity market and prevents a single company or sector to dominate the index. Overall, the diversification in the S&P 500 helps to mitigate risks by spreading exposure across different sectors and companies. By investing in the S&P 500, investors can gain a broad market exposure, reduce individual company risks, and achieve a stable return in the long run when compared to investing in individual stocks. The second reason why you should be investing in the S&P 500 index is because you can buy low-cost index funds. Let's compare this to investing in a real estate property. Let's say the property you're looking to buy is $500,000. And most likely, you're going to put down a 20% payment on that property. 20% of $500,000 would be $100,000, meaning you'll need $100,000 in capital up front to just purchase the property. And we haven't even accounted for the closing cost, and depending on where you're buying, you might have to pay the realtor. Also, depending on the property, if it needs repairs to be in a presentable position to either rent or flip the property. So other investments might require more capital up front. Now, comparing this to a low-cost S&P 500 index, you just need a couple $100s to really get started. And if you have this couple $100s, you can keep investing each single month and build up your investment. And getting started to invest is very easy. You really just need to reach out to your financial institution and open up an investing account. Most financial institutions will have some restrictions, but overall, you just have to be 18 years and older to open up an account. And like I've said in other videos, my recommendation is to get started as soon as possible. So if you're watching this and you're 18, go open that investment account and start investing today. There's various different low-cost funds. And for my Canadian peeps, I personally love ZSP. This is the one I use, and it's really served me well. But do your own research and see which one you like the most. And just get started. Just start investing and watch that investment grow. The third great part of investing in the S&P 500 is that it's passive investing. The index fund allows individuals to get the market return rather than beating the market through active stock selection and timing. Passive investing provides transparency, simplicity, and stable long-term returns. And this is great for investors that like a hands-off approach. So when it comes to investing in individual stocks, you really have to stay on top of the company's fundamentals. Also, you want to see what the CEO's vision is of the company and where the company wants to head towards. And then you probably want to do an analysis of what the company's worth now and what it could be worth in the future. In real estate, once you buy the property with all the capital that you put down, you have to keep up with the repairs and maintenance of the property, collect rent from the tenants, deal with tenant issues, and make sure the property is rented without having a lot of vacancies. With the index fund, there's no real research that's really needed. The index fund is more so that you just buy and forget it. The S&P 500 has the 5 largest public corporations in North America, and it's periodically rebalanced to make sure that it provides an accurate representation of the US equity market. So really, you don't need to do anything. Everything is done for you. All you need to make sure is that you keep investing every single month, or however you like to invest, which is great. So now you can figure out how to work on your non-passive investments, such as trying to make more money by getting a raise at that job or starting a business. The fourth reason why you should be investing in the S&P 500 index is because it provides consistent performance. In the past 30 years, the S&P 500 has provided an average return of 10% a year. This is an amazing return in the long run. And even Warren Buffett, one of the greatest investors, has commented on this. Buffett believes that the average US investor should be investing in the S&P 500 index. He bets that the S&P 500 will beat the actively managed funds in the long run. If one of the best investors believes that the S&P 500 is one of the best investments, then I think that says a lot. Plus, at the end of the day, most investors are emotional. When there's a market downturn, everyone seems to freak out. You would be surprised how many times I've gotten a text or a call late night asking me if they should sell off their stock just because the price has dropped. So if you're one of these individuals, definitely look at the S&P 500 index because you're buying the overall market, reducing your overall risk to the downside. Fifth, and the final reason why you should be investing in the S&P 500 is because it's globally recognized. The S&P 500 index attracts a significant amount of investments from around the world. These investments are from international investors, such as institutional investors, asset managers, pension funds, and individual investors. They all allocate their capital to the US equities through the S&P 500. These investments impact the index's liquidity, depth, and stability. Many international fund managers use the S&P 500 as a benchmark to evaluate their performance and constructing their portfolios. The index serves as a reference point in relative returns, risk-adjusted performance, and portfolio diversification. The S&P 500 receives extensive coverage from the global media outlets, research firms, and market commentators. News agencies such as Bloomberg, Reuters, and CNBC regularly report on the S&P 500's performance, market development, and sector trends. And you'll also find that financial analysts and economics worldwide will apply their commentary on the insight and the global impacts of the S&P 500. Overall, the global recognition of S&P 500 underscores its significance as a leading benchmark for the US equities and its impact on the global investments. So those were my 5 reasons why you should be investing in the S&P 500. I really hope this was enough to convince you to invest your money into the S&P 500 index, and so you can start building that wealth in the long run. I really hope you guys enjoy this video, and please stay tuned for future videos. So until next time, remember to keep investing.